found Australia's house prices and household debt have reached unprecedented levels. The Organisation for Economic Cooperation and Development says tighter lending regulations and measures to build more homes could help to alleviate the risk of an economic downturn. Economist and housing market expert Dr. Andrew Wilson says house prices are unlikely to drop significantly while interest rates remain low.
There's no doubt that the increase in house prices in Australia generally since 2011 have been because of sharp decreases in the interest rates. I think we would need to see sharp increases in interest rates to start to see a sharp decline in house prices. Of course, the historical record shows us that we have strong boom periods of house price growth, but orderly correction phases following that. So I think it's really a question of interest rates, and of course interest rates have been on hold since last August. The Reserve Bank meets next Tuesday. I think they're likely to remain on hold. I think they're going to remain on hold for the longer term. I think the Reserve Bank is taking a conservative view of interest rate policy. I think it doesn't want to head down to that zero level that other economies have found themselves stuck in. So that means that really we don't have the energy up or down to create any sort of extreme outcomes in house prices. I think house prices will start to moderate going forward now. We've already started to see signs of that already, but clearly we have a multi-speed housing market, strong in Sydney, pretty strong in Melbourne, but just so-so in the rest of the country.
That is true. Now, before we actually go into the actual policy, and I wanted to discuss that with you, we have just had the GDP figures out. We've narrowly missed a technical recession, showing that Australia's report, of course, mentions that there would be a major macroeconomic implication. Just paint the picture for us. If this downturn was to happen, what would be the implications on the economy?
Well, look, we're also fortunate in this country that we have a very risk-averse financial sector. We see APRA acting at the moment to tighten lending conditions, particularly for investors, and that's what keeps the fences around an orderly housing market, as the banks don't take risks with their lending, even in strong periods of demand. And I think that we can be reasonably confident that that will continue, and that will continue to create those orderly environments for house price outcomes. But certainly higher interest rates are the risk to the housing market, as they historically have been. And of course, we really don't have the macroeconomic environment to be even thinking about higher rates from the Reserve Bank. If anything, our economy is still underperforming, and I think that we'll have flat interest rates going forward, although that doesn't mean that we won't have higher mortgage rates from the banks, but I don't think they're going to be at the level that's going to create a significant